go. Okay, so we're looking at postponed VAT accounting. Basically, what I understand that to mean is when you are importing goods from Europe, the supplier now invoices you just for the goods with no VAT on there, and they may well have they should have a notification on their invoice that but now I'm thinking of reverse charge now. Let's to deal with this one first. So you're importing goods from Europe. You'll get an invoice for the goods from your person in Europe, and you'll have that invoice to put in without any VAT implications at all. And then you will, when the goods arrive at the border, you will have a notification and an invoice from the importers, whoever they are. Now, you can choose to opt in or opt out of postponed VAT. So the idea is to help your cash flow. If you opt into postponed VAT, in the old days, what used to happen was I had clients that imported clothing from India. When the goods arrived at the port, they were sent an invoice which had VAT and duty on it from the importer. They had to pay the VAT over to the importer and they paid the duty to them. Then the goods were shipped to them, and then they would receive a certificate from the importer that showed what VAT they had paid, and they could then reclaim it on their next VAT return. Because obviously, if you're a business that's VAT registered, then you can reclaim the VAT that you've paid out. What postponed VAT is all about is when you receive that invoice from the importer, you can choose not to actually hand that the VAT money over to the importer, but you postpone it. And then when you then submit your next VAT return, you're in effect declaring the VAT that you would have paid and putting the reclaim on the VAT return at the same time, so no money changes hands. So it means that it helps your cash flow. You're not having to pay that money out. So what you need is a way to enter a transaction so that it appears on your VAT return in box 1 and in box 4, but actually nothing concerned with that transaction appears anywhere else on the VAT return. So you will end up putting 2 separate transactions in. You will put one transaction in for your goods, which will go in the value of purchases, and you would put that in on exempt VAT. And then you would have a separate transaction for the VAT amount in the postponed VAT. So the first step is to set up those VAT codes in Xero. Now it's a little bit confusing because there is at the moment another thing that came in on the 1st of March, which is domestic VAT. Now that applies to building contractors and subcontractors, but it's a very similar thing. And with domestic VAT, if you have somebody, a subcontractor that invoices you and they are, it's only relevant to VAT registered and if they are CIS, Construction Industry Scheme, if that is relevant. What will happen in that case is your subby will invoice you for the work they've done, and they will just invoice you for the labour and the for the materials that they've done. And on that invoice, they will say there would have been VAT of this amount on, but you need to declare this on your next VAT return. So again, it's somebody that in the old days you would have paid VAT to, but in this new world, you don't have to physically pay the VAT out to the person. You then need to declare that on your next VAT return in the same way. It's exactly the same principle. So what Xero have done, if you click on your organisation in the left-hand corner and click on settings, and then if you click on advanced settings and go to tax rates, they have already added a facility for the domestic reverse charge tax rates. And all we are doing is, because it's exactly the same accounting, it needs to put something in box 1 and in box 4, then we're actually going to add the domestic reverse charge rates to our Xero. You can see there's 4 options here. There's 20% or there is 5%. So, and it's kind of like, this is where it's adding the notional VAT. So I'm going to add the domestic reverse charge rates. Now, if you're doing
Alison?
yeah.
Yeah. Sorry, there was a bit of lag there. The screen didn't come up.
Okay. Have you got it now? So can you see the domestic reverse charge rates? Brilliant.
Yes, I can now, yes.
Perfect. So if you're obviously construction industry scheme or anything like that, then you would leave this like this and you would leave it domestic reverse charge rate. But if you're wanting to use this for your postponed VAT accounting, what you can do is use exactly the same code. So I'm going to click on the domestic reverse charge, but I'm just going to rename it. Postponed VAT at 20%. And what this VAT rate is going to do if you use it is it's going to put the notional VAT in at a 20% rate. And it's still tax type domestic reverse charge. And it's going to allow you to not have actual VAT that you're paying over to the supplier, but it's still going to put a notional VAT rate in box 1 and box 4 at the 20% rate. So I'm going to save that. Now, you're less likely to get the 5% if you're importing, because those are more concerned with fuel and that kind of thing, fuel and diesel, commercial diesel. So you're less likely to have those. So if you wished, you could get rid of those. But we're going to have domestic reverse charge rate, and I'm going to change this now again to postponed VAT at 20%. And again, so that's the notional rate. So let's save that. So that's now added those both to our income. Now, I haven't checked with Xero what you do if you need to have domestic reverse charge rate and you import VAT. So I guess if you do that, you just rename this that it could be used for either. You know, it's just a name. Okay. So now if you're thinking about the scenarios, first of all, you've got an invoice in from a supplier in Europe and you are just wanting to put that bill in. So we're going to go to a new bill. You are going to put in who it's from. So let's just put AM supplier in here, new contact. Right, so this again, this just applies from the 1st of January. So this is going to be anything that comes in from the 1st of January. If you're dealing with anything prior to that, you know, looking after historical stuff, then you would put that in. We're going to put in goods from Europe in here. And I'm going to just use a nice easy figure and say it's £1,000 worth. You're going to put this into your normal account that you would put your cost of goods sold. But then we need to change the tax rate to our postponed VAT at 20%. So you can see this has not added in here any VAT at all to the actual invoice because you're still paying the supplier just the amount of goods that you've ordered from them. But it is going to add a 20% notional amount of that 1,000 into the VAT return into boxes 1 and 4. So I'm now going to approve that. There we go, rookie error, due date cannot be 0. So my little trick, if for those that aren't familiar with Xero, instead of having to type a date in, you can put +0, +30 or anything else in there, and it will put the right date in there for you to put. There we go. So we have now approved that. Okay. So I want to go now and have a look at my VAT return just to show you what the entries that it's done for it. So let's go to our accounting and to our VAT return. Okay, we're going to go to VAT returns without MTD and we're just going to look at 1st to the 31st of March and create. Okay, so if we now go to transactions by VAT box, you can now see VAT box 1 has got that £200 notional VAT in. VAT box, as we go down 4, VAT box 4 has got my notional VAT in. So in effect, no money is changing hands for the VAT, but you do have to declare it to the HMRC. And then if we go down, we can also see VAT box 7 has got our net of £1,000 in there as well. So that's in the case where you're just doing a straight 20% of the notional VAT. Now, I don't know whether sometimes you might get, when you actually get the notification from, because this is just basing it on 20% of the value that the supplier has invoiced you. So I don't know if you ever get the case where the actual VAT that's supplied that you get informed to you from the importer might be different from that £200. So you might need to be able to enter a difference. So I want to show you another way of being able to enter VAT into the system, but without needing to put in a full invoice. So if we go back to bills to pay, so this is a separate scenario. So you may have put the purchases in yourself without using that VAT code and just put them in as exempt expenses because you're not sure what the VAT amount is going to be and you need to put that in later. Okay, so we are going to do, put in the supplier this time, goods from Europe, unsure of the VAT amount. And I'm going to put £2,000 in this time. Cost of goods sold, and this time I just want to make the amount appear in box 7. So I am going to do just zero rated expenses, and all that's going to happen then is that amount is going to appear in box 7 of the VAT return, because at this point I have no clue what the VAT is going to be and what I need to report on. Again, I've forgotten the due date, and I'm going to approve that. Now this time it's me being a bit slow. Come on, Xero, you can do it. It's got the little circle of doom going in the corner this time, so it's not you lagging, it's me being slow this time. Due date cannot be empty. Look, there you go, you see. I'd do that again. Okay, there goes the wheel of doom. So this time you've got the goods and you've just put them, so they've gone in box 7, so you've purchased them. Then down the line, when the goods arrive at the border, this is still being really, really slow. Just talk amongst yourselves for a minute. Perfect opportunity to have a sip of tea. There we go. Right. So now, when the goods arrive at the border, you may receive a bill which has got the duty on it, and it may well have an amount of the VAT on there that you are. This time, I'm saying that if this is the case where you are not postponing the VAT, I will show you that first. So if you were not postponing the VAT, then what I would have done was, this is going to be the carrier, not the supplier. So we had £2,000, therefore the VAT is £400. But the trick to put in a VAT only invoice is you actually put the £2,000 in here. And we're going to, again, we can choose suspense or anything for this account because nothing is going to actually post to the accounts. We're going to say it's just 20% on VAT, just normal, and it's put the £400 VAT in there. And then you would then put a second one, VAT on goods. And this time we're going to put £2,000 into suspense, but this time we're going to put zero rated expenses. Okay. And we're going to make this a negative amount. In effect, what that has done is it's given you a transaction where it's putting nothing to the profit and loss. If you looked at your suspense account, it would be zero. And you could just use your cost of goods sold account in there as well. As long as you use the same account in both transactions, that's fine. It's going to allow for the fact that you need to pay the carrier £400, but there isn't any VAT on there. I would also add the duty or any other costs in there, whatever they are. And put that in through again as zero rated. Now, some accountants say to do it zero rated, some accountants say to do it exempt. I've seen massive arguments about this on forums. Choose which one your accountant says or which one you're most comfortable with and stick with it. Zero rated and exempt both appear in the same way on the tax return, but it's just that you can report on them separately. So that then allows you to record that invoice. But if you were wanting to do the same thing, but you're not actually needing to pay the VAT because you're doing postponed VAT, that is where you can just change the VAT code on this first transaction to postponed VAT. And what that's going to do, it's going to add that 400 in box 1 and box 4 for you because you've postponed it as you want it to. But you can see you're only paying the importer the VAT and the duty and the import costs. You're not paying over the VAT to them. Everything else on the screen is exactly the same. Does that make sense to you? Yes.
Yes, it does. Yes, thank you.
Good, good. Okay. So I'm going to approve that now. And again, you'd think I'd learnt by now that the due date can't be empty. It's because I've just created these suppliers, and normally I have default due dates set up on everybody on their accounts. So I'm using the demo company. Demo company, bad form. It should have a default due date set up, shouldn't it? So let's just, for peace of mind, go and have another look at the VAT return and just check that that has displayed properly. And I'd recommend with you, whenever you're doing this for the first time, then go and have a look, put an entry in and go and have a look at what that's done to the VAT return so that you can be absolutely sure that you're doing things in the right way. So we can see now before the VAT was on 200 and now it's on 600 because it's got those both in there. And I would also as well be put as much explanation as you need in the details so that when you're on the VAT return you can see really clearly exactly everything that's been done. There is a completely separate way that you can do postponed VAT in Xero. So I've shown you how to do it in with the transactions, and personally, I think that's the way that I prefer, because as the paperwork comes in through the month, you're adding everything, you're really clear and you can report on it on any time. But you also have the chance to add postponed VAT adjustments in Xero as well. So this is something that you would do instead of what I've shown you, not as well as. So it could be either or. And this is where, I suppose this might be the scenario where you've processed everything that you've had on the invoice and it's nice and clear, but then there's an unexpected VAT amount that maybe the value that the importers have done is different to the one that you thought, or there's some kind of exception that you need to put in. You can then put an amount in and a reason why. and you can put in more than one adjustment. And then save at the top right corner. Now we can see what that has now done. I choose transactions by tax rate this time. That has got, in fact, no, let's do transactions by VAT box. That has added that 1,000 as an extra there. So that's given you the two options of adding it individually on your invoices, supplier invoices as they come in. And we gave you the option of adding it as a notional amount on the supplier invoice as it comes in, or waiting until you've got the notification from the border, from the carriers to put it in then. And then the third option is just adding a figure that we'll put in on your boxes 1 and box 4 there. So that's it in a nutshell. That's everything to do with the actual practical entries of entering that postponed VAT. As the only one that's logged in live today, Rebecca, have you got any questions?
No, I think that's made it made it a lot clearer, because I wasn't sure how it would actually be entered into the software, so that's really helpful.
I find the most thing people are confused about is the fact that your no money is changing hands. That really confuses people. So I find
Yeah.
the easiest way to think of it is if you were buying something from the UK, in effect, you don't pay the VAT. But you pay the VAT to your supplier, and then when you produce your VAT return, you declare it on there and you reclaim it back off the HMRC. And all you're doing is you're removing the element of paying it to your supplier. So it's never actually leaving your hands. And to think of it in a UK scenario, sometimes, you know, as soon as you mention export or even this domestic charge or anything like that, it immediately kind of sends your brain into whirring that just seems really confusing. So all you need to end up is that when you're looking at your VAT total, it's not going to appear in that total of what you're paying at all, but it's just the fact that you still need to declare it to the government. So we can see in here, £68.56 is the VAT I'm paying. You've just got to declare it in box 1 and box 4, but you still need to declare all your purchases in box 7. And as I said, using exempt or using Xero rated will both have the same effect. At the moment, all we're sending to the HMRC, even with Making Tax Digital, is we're sending them, this is the amount in box 7. They don't know what we've put to exempt in our own accounting system and what we've put in as so this is where I say choose the most sensible one that's yours. You know, if you're an end user and you're looking to your accountant, then ask them what to put it in at. And it just means that choose the one that makes the most sense to you and be consistent. And the other thing I've said to people is if you've got different scenarios and you want to be able to see really easily the split, so you might have the CIS domestic reverse charge, and you might also have the import VAT. There's nothing stopping you adding another VAT code in to Xero, both of them being 0%, but choosing to call one for the domestic recharge and one for the other version, just so that you can see split out exactly what VAT codes you have used. Right, that's it then. I shall close the meeting. I just want to say my little spiel. If you've enjoyed this today, if it's helped you, please go to siliconbullet.com and leave a review and let me know, because that will really help, because then I know which ones I need to do more of. If you've got any requests of similar masterclasses that you would like to see, then please get in touch and let me know so that I can then do similar things like this. This is the first time I've tried it with someone live tuned in. I've done it dead to the world with nobody there before, and I think I prefer having somewhere there to bounce it off and to check it makes sense, because then it kind of gives a little bit more clarity. So thank you very much, Rebecca, for joining in today. You can find Silicon Bullet on YouTube channel where I record and upload things like this. You can go to blog.siliconbullet.com where I also write blogs with the same content, so that if you're the sort of person that wants to read it, then you can there, or if you prefer a video, then tune into these. Thanks very much. It's Alison Mead from Silicon Bullet.
Thank you very much, Alison.
That's okay. Then I have to realise how to switch the recording off.